Time to get some common sense on constantly checking and tinkering with your portfolio. Who better to bring in than Craig Bolanos? Craig is a co-founder and wealth advisor at VestGen. Craig, nearly half of all investors check their retirement investments every day. What's your common sense?
I don't think there's any harm for any investors, regardless of where they're at in the spectrum, to stay connected to their money. And online access apps and digital platforms allow all of us to do that. No one's dependent upon waiting for a monthly statement anymore. But sometimes checking too frequently can create some bad outcomes, depending on how someone manages the emotional intelligence when it comes to investing their retirement dollars.
What are some ways to avoid those bad outcomes by over-checking investments, especially when we're seeing wild swings in the stock market?
Everybody, I think, recognizes that the price you pay to build long-term wealth is temporarily, but it's temporarily seeing meaningful portions of your capital disappear on paper as markets go through their volatility cycles. And just as we're interconnected to our money on a daily or intraday basis with our apps, our smartphones, our devices, we have to understand that the markets move faster than they used to because of that same interconnectedness of emotions. So I think for that reason, people need to somehow check their emotions at the door when it comes to being a successful long-term investor.
What about people who are constantly tinkering with their investments, trying to beat the market?
Number one, in many times there is some transaction cost that you can't see. That's the delta, the spread between the bid and the ask on where a security is trading. Number two, a lot of that tinkering can create some level of tax drag. That's not ideal for almost any client. And number three, you run the risk of getting whipsawed in today's marketplace, which is not just humans, it's algorithmic computer-based trading. It's what I call fast money. And I think everybody should really make sure they know the difference between tinkering and simply trading around some positions at the margins. Those are two entirely different things.
Good to know. Any final advice for people who want to keep checking up on their retirement savings?
My final advice to everybody is stay informed. Connect with your money as frequently as you need to. But most importantly, remember why you're investing. And when you know that meaningful purpose, you know that why, then as long as you're aligning a bespoke strategy tailored from your financial plan leading to the investment execution, you too can get through the emotional roller coaster that is investing in today's fast-paced market. If you want to learn more and you want some help and guidance, you can do that. Connect with us online at GetRetiredStayRetired.com. That's GetRetiredStayRetired.com.